Good morning and welcome everyone to the Ultimate Trading webinar for beginners. My name is Danny and I will give you the webinar today. The first part will be more of an introduction to the company and the services we see in this facility, which is called the Web Trader. And you can access it via the website avatrade.com. The second part will be more practical. We'll go through which will be the majority of the webinar, and it will be about basic fundamentals, basic essentials for trading, which I think, even though this webinar is called the Ultimate Trading Webinar for Beginners, those tools are absolutely useful for intermediate and advanced traders as well. There is a question here. Why in English and not German? Well, Mr. Mars, unfortunately, I don't speak German, but what I can suggest is that you will watch the recording on our YouTube channel, and there you can choose subtitles German. That's what I would do. Then you can enjoy this webinar in German on YouTube. All right, and this is, by the way, this is relevant for all of you guys as well. Whoever wants to watch the recording again after the end of the webinar in your own pace, you're welcome to visit our YouTube channel, and there you can find a lot of content, not just the recording of this webinar, but webinars about analysis and risk money management, and just excellent content, which I highly recommend you guys to visit. All right, so I would like to ensure that everything works properly in this facility, and the webinar is recorded as we are expecting. So I'll be right back in a few moments, then we'll hit the road. Thank you very much. Excellent. So I'm back and everything seems perfect. Before we hit the road, I would like to ensure that everybody knows that any capital markets and trading information disclosed in this webinar is provided for informative purposes only. It should not be constructed or applied as an investment advice, recommendation, or suggestion. So as I said, we will open the webinar with an introduction to the company. And for that, we'll have a nice place for the notes, which is that thing right here, and in here we'll write everything that we need. All right, and like I said, we will open with an introduction. So as many of you know, we are a regulated company. We're here since 2006. In case you got a question or a query, you can access the customer service here at the bottom left with chat with us or on the WhatsApp. Of course, if you're using a different interface, you're not going to see that button here at the bottom left. Therefore, you can contact customer service via direct email to cs@avatrade.com. That's under the customer service umbrella. All the questions can be addressed to this email or the customer service. For trading queries, you can contact your senior account manager. That's, of course, after you've made a deposit and you get going. You can ask a senior account manager to be assigned on your file depending on your eligibility and to give you full support through the process, which means any kinds of assistance for trading methods, strategy, risk money management. Okay. Anyway, a lot of things that he can provide. We're not going to mention all of them. I'm just going to let you know that the senior account manager is qualified enough to give you a solution for all what's under the trading umbrella, and customer service will give you customer service. And that's about that. Let's carry on with the platforms that we're seeing now, which is the web trader, as I've explained in the beginning of the webinar. And to enjoy this interface, you don't have to download or install anything because it's on our website. And the app is called AvaTrade's Trading App. Okay, this is what we're looking at right now is the desktop version. I'm using it on a computer, and if I would want to use it on my phone, I'll have to look for the AvaTrades trading app. Okay, that's how it's called. Let's actually mention the other platforms that we have as well, and then we can easily proceed with the web trader. So as you guys know, we have the MetaTrader 4, MetaTrader 5, Ava Futures, Ava Options, and lastly, Ava Social. Okay, and in that case, because we're looking at this is a webinar, ultimate webinar for beginners, I would like to say a few words about Ava Social, which allows you to do two main functions, which one of them is follow, the other one is copy. Let's understand quickly the differences. So let's suppose that I'm a beginner. I'm not entirely sure about my next steps, and I would like to perhaps get some inspiration from another trader who has an ongoing strategy. So I can do one of two things in Ava Social, and that's to follow or to copy. Follow means that I'm going to get messages with what the position the trader has taken, and I can do the same thing if I would want to, just like a signal. Gonna get the message with the position that the trader took, the lot size and everything, and I can either do it or not. And it won't happen, the positions won't happen automatically on my account in the follow options, okay? But the copy option from the other end allows me to link my account to another trader's account and to entirely copy the strategy that he's using. The good thing about using Ava Social is that I can copy the strategy, but I don't have to copy the lot size to its full extent. And this is very useful in case I'm following another trader with a different balance, okay, which often can happen. I can follow, if I'm looking at a good strategy with let's say a trader that has 50,000, or let's not go too far, maybe even 20,000 or 30,000 on his account, and I'm with 10, so it's probable that he might take positions my account won't withstand. So how can we overcome this? Very easily. With Ava Social, I can customize the lot size to be different. I'm still going to enjoy the strategy from trader B, but the lot size will be different, which allows me to assess and make judgment about my next actions. Okay, of course, a natural process for me might be to first follow and then to copy, but it's not mandatory in any way, and you can make your own process. All right, so as we said, follow means messages, notifications with the positions. Copy means that the positions will run automatically on my account. Of course, if I would like to examine and see what this trader has done and to look back on the positions that my account had, so I can visit MT4 or MT5 and review every position that I need. Okay, all right, so let's proceed with the web trader. Let's delete that and just leave it like this. All right, so what I'm going to show you now are features that will only be found on the web trader or the AvaTrades trading app. But let's look at the menus here to the left. We're going to begin at the top going down. So the first icon here will allow me to get to my personal area, see my personal information and all of that. Underneath is trade is where we are at right now. A very nice shortcut to get back to here from any other page on the website is just by clicking on the icon here or on the icon here. Let me show you a quick demonstration. So let's suppose that I'm here and I want to quickly go back to the chart. Well, what I can do is click here on the symbol and we're right back. Okay, going further down, we have positions, which we can review all the pending positions and positions that we and orders that we have. The positions that we have in orders, we can review all the orders that we have. In here in history, well, it's self-explanatory. I can filter it by dates to have a range of what data I want to look at. Underneath, we have signals. Maybe let's speak about that just for a little bit. So the way that it's constructed, as you can see, is by a timeline, the production time when the signal was created until the latest. So those here are the newest signals. And if I'll scroll down all the way just like that, we're going to get to the oldest. Okay, now what difference, before we'll speak about it, differences taking a new signal to an older signal, let's first understand how to use the signals in general, just the process in general. So we have here a few categories, all with general Forex for currencies, cryptos, cryptocurrencies, commodities, and indices. If we look at the indices, one of the indices is an example. Let's look at NASDAQ. Okay, so I can click on View Signal. We can see that it constructed very nicely. We have here the type, the scenario of the analysis displayed in here. We have take profit, we have stop loss, and we have the entry price, which was based which the analysis was based upon. And we can see that if we click on View Signal, we already have this analysis displayed on the chart to the right. We can expand the graph here if we want, and we can match the validity. Because if I would want to place those lines on the chart, right, and do my own analysis on top of what I see here, unfortunately, the image that we're looking at right now is not the same as we see here. And this is why it's not allowing me to get to the levels of resistance displayed on the chart. I know we haven't touched analysis yet, and that's completely fine. I'm just going to give you the idea on a nutshell so we can understand how the signal works. We have the current price here moving up and down, marked in yellow, and we can see that there are two green lines and two red lines, and the yellow line is right here. What does those lines, what do they mean? So first of all, let's get to the same picture we're seeing here, which is the daily. Okay, like it says here under the validity, it's daily. So we're going to click on here on the time frame, scroll down. We see we have several segments here: minutes, hours, days, weeks, and months. We're going to select days, and we're going to click here at the column area so we can better customize the chart like that, and we get to enjoy the same levels in here, and we can comfortably just a second, we can comfortably place the lines the same way that it's constructed in here. We have another one at 2030. It's a bit difficult to, okay, so sometimes even though it says here daily, let's maybe switch to 4 hours. Will that make more sense? It seems so. Yeah, it seems so. What about an hour? Okay, makes even more sense. All right, great. So we have here the first line, we have here the second line. It seems like the first line has already passed. So in this part, the scenario, I'm going to show you in a moment what happens if the levels are has already passed. I'm going to show it to you in a moment. Okay, so just like that, we can easily set it for ourselves. Okay, so what happens if it doesn't let you land on a specific number? What you can do is you can just select the line, click here on the white cogwheel, and just specifically target the price that you want and click save. and I can flatten out all those numbers if I would really want to. Now we have the same two red lines and the yellow line which keeps on moving in the middle, and at the top we have two green lines. And now let's quickly understand what does that mean. So we see here resistance, we see here support. All right, so resistance will be pick points on the chart. As you can see, here is an example, and in here is an example. Resistance will be so-called the roof of the chart, okay, which will represent higher levels as I described in here. And the support will be the floor, okay, from underneath. So support levels will be edge points from the bottom, and resistance will be at the top. Okay, let's maybe make, we don't really need this guy, maybe let's get rid of it. Okay, and that's how it looks like. All right, very, very simple. Now, in a sell scenario, our take profit would actually be down. So my profit rate area will be lower. Okay, so to simplify what I just said with a quick recap, when I'm buying something, my intention is that the value will increase because I want to sell it in a higher value. When I'm selling, similarly to what we see here, the sell type, the type is sell. That means that I want the value to decrease. So even though it's marked in green, when I'm selling, my targeted price for profit will be lower. Now, let's put this aside because it's a little more advanced and we're not there yet. Okay, let's go back and quickly recap how to use a signal. Okay, without everything that I did, just simply using the signal as it is. So it's very easy. We click here on the signals, we go to the indices, and then we go to NASDAQ like we did, and we just select one of the scenarios. Let's go with a sell like the scenario. Okay, and we can see that just like that, we're already set with take profit and stop loss. In a moment, we'll understand what they do as well. And I can in here place my, if I want to, I can do the analysis and place the lines and indicators on top of that. And if I don't want to, and I want to use the signal just like it's constructed in here, all I gotta do is sell. So basically, I clicked 3 times, maybe 4 times. Okay, 1, 2, 3, and 4, and I'm good to go. So that takes 10 seconds to use the signal. Of course, I would prefer to do some of my own analysis and you know, the necessary steps on top of that. But if I don't want to, 10 seconds and I'm in the charts with the signal constructed. Now, of course, on top of this, I can change the lot size to something else that I prefer. And what else? I can adjust if we are with a sell. I can adjust also the take profit and the stop loss. But let's understand a moment. Let's understand what that means. Take profit and stop loss. So take profit allows me to target in advance a future price, which if it triggers, it closes the position with the profit. And if it's okay, and stop loss, what it does is it closes the position with a loss, which is useful to mark a spot on the chart that I don't want the position to carry on. Meaning 19,500 is here. Okay, and we'll flatten that in a moment, don't worry. And our stop loss is supposed to be somewhere here. Now we're going to flatten those numbers to match with the stop loss. Going to click change the coordinates, paint it in red, and same thing, click change the coordinates, paint that in green. All right, great. And now we have two targeted prices, which will be triggered automatically reaching those levels, and we can step away and do whatever is necessary for us. And in the meantime, we have pending orders, automatic pending orders that will close the position whether if it gets to the green line with the profit of 1,300, if it gets to the red line with a loss of 1,000. As I have explained, this is a sell position, so our intention is that the value will decrease. Otherwise, if we would buying, that would be the other way around, and our take profit would need to be in a higher level. All right, great. So let's proceed with what we have lower down the menus. Just before we do that, I would like to say a few things about the signals. You probably noticed there are sometimes the take profit and the stop loss are not displayed. And let's understand what that means. If, for instance, we're going to take some maybe crude oil as an example, and we will now try to use the signal similarly to NASDAQ. So we'll click on View Signal, again, to open the analysis. But unfortunately, as we can see, it says here, there is a message here, the market has already reached a key level. So I don't know if you noticed, but when we were on NASDAQ and I placed the lines that we have here, it already passed one of the lines in that scenario. What happens when we're beyond the analysis that was done here is that the signal becomes futile because those levels has already, because the scenario already happened. Okay, which makes this signal futile. And if I will try and use it, even if it's the sell type, I'll click on sell, it's not gonna let me, and I don't have any take profit and stop loss. Okay, so that what the when we don't have take profit and stop loss, we know that the signal is no longer valid. It doesn't mean that crude oil doesn't have any more signals. It means that at the moment, it doesn't have any more signals, and we can go back to the list and maybe refresh whenever we want, and it might have a signal again. How can I know if my instrument has a signal or not? What I can do is I can, from here, I don't even have to go to the signal section. From here, I can search. Let's suppose I want to search crude oil, let's suppose. Okay, so crude oil, I'm gonna type here, click on crude oil, and we can see, okay, we see that crude oil has a signal, but if we'll try, it's not gonna let us. Okay, so in here as an example, it doesn't have a signal. Let's pick something else with a signal. You see natural gas as an example, we'll click and it works. So in a matter of seconds, we've got the signal here. We can choose what scenario. In a matter of seconds, we are on with a signal. All right, great. So let's proceed. This is not a webinar about signals. This is a webinar for beginners, and I would like to give you some useful content. All right, so let's proceed. Now, further down, we have here the news. Just one quick thing. The signals are not made by AvaTrade. They are made by the Trading Central. And it's important to know that the analysis that is here is technical analysis. Support and resistance and everything displayed on the chart, averages, numbers from the chart is technical. We're analyzing technically based on the previous behavior. And thanks to that, we're using all kinds of things to assess the future movement. We also have another type of analysis, which is fundamental analysis. So to simplify that, okay, we have technical analysis and we have fundamental analysis. And the easiest way to explain how it works is technical analysis will be how the market is moving, and fundamentals will be why the market is moving. Okay, so gold created another all-time high, 3,000 at the moment. Um, how it's moving? We can see that it moved more than $100 in the past 2 weeks, $500 in the past 6 months. The reason that it's moving, why the market is moving, is of course the shape of the economy. All right, so in terms of fundamental analysis, how do we do that? Well, there are many ways. We can Google for information. We have here a very nice news section, which is also filtered by different subject. And underneath here at the bottom, we can also see what's related to the article here. So very easily, I can choose maybe indices and the pre-Asia market brief. As you can see, the US stocks fall ahead of Fed. We're going to go through that, and we'll see that it's related to crude oil, gold, Bitcoin, and the pound versus dollar. So this is one way to get the news. Another way, if I'm more specifically directed to, let's say, companies or something more specific. So what I can do is you see this globy icon here. Under discovery, we have analysis news, analysis views, market buzz, forex features ideas, economy calendar, and the trading calculator. Well, let's go with market buzz for the time being. And we can see that it's the bubbles here are, let's give it a moment. The bubbles here are based on the number of mentions. So the bigger it gets, the more mentions it has. That means that it's more popular online based on the data in here. And we can see all kind of Tesla, NVIDIA. Let's go in NVIDIA. And in here, it's also separated to different topics. The partnership seems like 229 mentions, product release, price target reached, production outlook positive, and product demand increase. All those are separated here in the articles, which if I'll select partnership as an example, I can specifically filter it to the partnership and directly see what I'm looking for. Okay, we have other parameters in here, how much it moved, and all kind of things here which you can enjoy by yourself. And we can quickly go back and see again the bubbles. Of course, I don't have to look at it like this. I can set it in a form of a list, but it's really not, it's up to you, to your taste. Okay, underneath down the list, we also have the economy calendar, which is also under the umbrella of fundamental analysis. And the reason is, as I have explained, technical analysis, how the market is moving, fundamental analysis, why is the market moving. And now, it's also constructed very easily. We can see all kinds of events, okay, and news and decisions. And we can see the previous result will be on this column. The forecast result will be, on this column, and the actual will be on this column. And very naturally, we don't get the actual for those events because they're under the red line, which means that they didn't happen yet. So how can we know the result? We can't, right? So everything under the red line are yet to happen. We're not going to get any result. And the forecast we do get sometimes. So we have previous forecast and actual. Forecast is what we're expecting to happen. Previous is what happened this time, and actual is the result. We can also see the rate of impact by here under importance, and we can see we have high, low, and medium, and we can also filter it by the in here. So we can go with maybe high events only, and with high events only, as you can see, we only see high events. What if I would like to focus on the Aussie as an example, and I don't want to see pound and everything's displayed in here. So all I gotta do is just click on the arrow here and select from the list what I want to specify, and it will only show me the results based on the filters that I have, which is high and which is the Aussie. Okay, so and one more thing, as you can see, the dates that we're seeing here are not the same date on the calendar. So how do I select a range of dates that I want? I need to click on the current date, and then the following time, let's maybe extend it like this. Okay, and what you see with the blue trail here is what's selected, and those dates will be displayed on the chart. Okay, and as you can see, it's showing us from the 19th, which is today, until the 9th. Okay, which is roughly 2-3 weeks. Okay, and we can easily reset everything just by clicking here on the reset button, and we are back to the beginning. I think that for the first segment we spoke enough. We saw everything that we should have had, and we can carry on with ease to the second part. Oh, just one last thing, just to make the economic calendar more useful. You can see that there are 5 buttons in here by the to the right hand side. We have here the impact, volatility, price chart, event chart, and here we have add to calendar. Add to calendar, to my opinion, is one of the most convenient functions on this calendar, and I'll explain to you why. Let's suppose that I'm analyzing something and I'm occupied during the day. I'm not sure that I will remember to go specifically to the event and sorry, to do my analysis. What I can easily do is click here on add to calendar and just book it on my calendar. And then I get a notification on my phone, and I can specifically see the event, the result, and I can do the analysis without a waste a minute. Okay, so I think it's very useful, and you can use that. Now let's go back to the default screen and get ourselves a nice instrument to work with today. And I think that what we wrote here is no longer relevant, so we're gonna delete it in a moment. Okay, let's go with commodities and with metals, and actually I think let's today go with gold. Okay, gold seems like a rising star. As you can see, of course, nobody can be too sure how far up will it go or if it will turn around, but currently you have to agree with me, this is quite incredible in terms of percentages. The movement here is not a casual movement. All right, so let's maybe switch to weeks and let's align the chart in a way that makes a little more sense. Okay. All right, great. So the way that I selected gold was manually from the outside, from the outside. But if I would want to, I could write it right here. So let's suppose that I'm on something else like this, and I want to get to gold, and I don't want to go outside and search for gold manually. What I can do is just click here, erase whatever is here, type gold, select it from the list very easily. Now, let's go to the right and explain what those buttons are doing so we can enjoy this interface to its full extent. So we've got gold, and we've got currently we're looking at weeks. This icon here, we already know that. We saw that on the signals. If I'll keep going to the right, we have here There are a few questions here. Does MetaTrader 5 offer options, or options are available only in the AVA options? Unfortunately, Mr. Parul, the options will be available on the options platform for you to enjoy. Not that I'm aware of with MT5. All right. Yeah, if there are any more questions, you guys are welcome to share with me, by the way. So if we keep going to the right, we have here the candlesticks versus the line chart. Okay, of course, as I said many times, when doing analysis using the line, not always give us the optimal result, and the reason is that versus the candles, it might lack some data. You see those rectangles that I placed on the chart? They are marking the reversal that we had on those three occurrences. And if I switch from candles to line, they disappear. Okay, as you can see, they're no longer there, which can be imperative when doing some analysis, but okay. Now, as we can see, gold is at, let's first finish the toolbar. So in here, I can enable the crosshair. At the moment, we've got no data from the candles. Of course, it's very challenging to do analysis like this. So we can click on the arrow, click on the second option, crosshair, and just see the data from the candles. If we keep going to the right, we can change how many charts we're going to have. We can have 2, 3, and even 4 like this. The next icon here is for indicators. We're going to apply on one anyway, so there's no point delaying on it now. And the last one before the sell and the buy is where I've got all these interesting lines that we had. Now, if we're going to look at gold, let's first click on buy or sell so we can better design our position. And let's also show you the different menus we have here. We have instrument details with all the details for the instrument, and we have order entry. Now, as you can see, the default here is 0.06. We're going to set it to 0.01 so we can better simulate what will happen and increase it to what we would like. And we're also going to enable execute when price hits, take profit, and stop loss. Okay, we spoke about take profit, we spoke about stop loss. What exactly is execute when price hits? So take profit, we spoke about it. We said that take profit is a target, is a price that we can target, which if it will trigger automatically, it will close the position automatically with a profit. Meaning, for instance, if I'm going to target, let's suppose 3.1, and I'm going to take the same ratio, which is 62. So we're going to reduce from 39 minus, oh, sorry, now it's 61. So let's flatten the entry as well, 30, 40. So that makes it 60, which means, just a second, don't worry guys, I promise that everything that I'm doing now will be explained in a bit. All right, and at the moment we can see if we took 3,100 as a target, what will happen is if gold gets there, the position will close, the platform will close my position automatically, and if it gets to 2980, it will close the platform will close my position with a loss. Okay, and I will lose potentially 60. Now, how does that work? You can see that because I'm $60 away on the profit and on the loss, I am, and I'm with 1 unit, I can make or lose 60. So what I can write here is when buying or selling 1 unit, every $1 movement equals, okay, $1 profit or loss. Meaning, because we've got 1 ounce of gold and it's moving $60 on the chart, we will make or lose 60. How so? Because what execute when price hits does is it automates the entry. It automates the entry, and if it gets to 30.40, which is, it's on the way there now, as you can see, it's less than $1 higher, then it will trigger with a buy. It's important to remember that the reference for whether the execute when price hits is a buy or sell, depending on what you selected. As you can see, because this is a little lighter blue, this is what is selected, and the pending order here will be a pending buy. If sell would be selected, this would be a pending sell. All right, now, as we can see, gold at the moment is quite bullish. We already spoke about that. We can place some lines to have a better proportion where is gold heading, and we can somehow assess those levels to make sense. Now, how can we begin to construct the position? Well, even if I'll click here buy and gold goes a little higher, I need to close the position to claim my profit. Meaning that only buy or sell doesn't really give me a lot, because I need to close the position to make profit. If it got down and I haven't closed the position, I won't make any profit. How do I do this? I'm going to go to positions, and if I see in positions that my position is making the profits I wanted, I'm closing it. Another way to do it is to use pending orders, as I just showed you. All right. As we can see, let's click on buy. As we can see, gold at the moment is roughly heading to the second marker. Again, we cannot guarantee anything, but that's what it looks like. And we would like to have some measurement, how far can gold go up? Now, one way to do it is to statistically examine the previous candles, and we can do what we used to do in the past before we had indicators, which is called manual check. Manual check will mean that I will subtract the open from the close and the high from the lows, and hopefully with that I would be able to assess how much can gold possibly move per day. However, the issue with that is because I've taken one candle, well, the average that I'm going to get from those numbers are not an average. The numbers that we have here are only one candle, meaning it's not really, to make it an average, we need to accumulate much more than the number from this candle. We need to take a good number of candles, maybe 5, 6, 10 candles to accumulate. All right, let's look at what we have here. So the open is 29965. Okay, close is, okay, close is 30.31, meaning $31 that it moved. And between the high and the low, which is including the fluctuations, we have 38. Okay, 38. Great. Now, this doesn't make too much sense. Let's look again. Okay. Open, close, all right. High and lows. Okay, that's fair enough. Now, if we're going to look at the actual average, which we're going to use an indicator for that, click on indicators, and in here type AVE like that, and we have the average true range. We can see that by default the length is 14. We can use it like this, which means that it's going to accumulate 14 previous candles, 14 previous days. Okay, the length is based on the reference displayed on the chart. So if it's days, it will show us the average for days, and if it's weeks, it will be the average for weeks. And so does for months and minutes as well. Now, if we stick with days, we can see that the average movement for days is actually 27, which is lower than what we had yesterday, which means that those numbers are a little beyond the average. Now, if I'll target that number, 3,100, we're seeing that it's more than double than the average movement. As we can see, 3,000, if the now price is 30.39, okay, let's call it 30.40, and the take profit, the target price is 3,100, that means it's $60 away, right? Okay, but the ATR equals 27,946, almost 28. So that becomes a little messy, and I would like to wrap it all together to make sense. First, what I'm going to do is I'm going to set a target that with this target, I can know that if I reached that target, I can close the position. Okay, so my target per day can be, let's say, $200. Okay, $200, and maybe let's be generous. Let's go 250 a day, all right? And the time length, well, will be 1 day. We'll keep it like this. I can change it if I want to, but I think 250 a day is not really bad, right? Let's do a quick calculation here. Right, $6,000 a month from only gold is not bad. It's not bad. All right, the following thing that we want is the movements. And as we can see here, we've already applied the ATR, which is showing us an average of 27,946. I'm going to round it to 28. Now, the actual movement that I will expect is, let's say, 25. Why is that? Because 25 is a precautious from the 27, and it will be round with the result that I'm planning to achieve. So now the last ingredient that to complete this equation is the necessary units. Let's recap what happened here, because it went down quite swiftly, but you will see in a moment that it's not complicated at all. Okay, so initially we roughly looked at gold. We saw where gold is heading. We also placed some lines here. There is no resistance since this is all times high and there is no comparison to make. We do get some support lines that I drew here with the assistance of Fibonacci retracement. As we can see, gold to get to the mark that we've drawn here is very far away as compared to the average. So if the price is 30.40 per ounce, again, to emphasize, the price displayed here is the price per 1 ounce. So if the price is 3,040 per ounce, and we wanted to get to 3,100, it's a bit far away. It's not far away in terms of if it will get there or not. It's far away in terms of it will get there today or in a day. Why? Because we can see that the average movement is 27. We also analyzed the candle by ourselves, and the results were 30.16 and 38.51, which is the results from yesterday. So we took the ATR, the average true range, which we've learned that it's based on the number that we define here, which is 14. Okay, and with 14, we got this average. Now, unfortunately, this number is not guaranteed. So to place the take profit exactly as the average, it might turn around before. So instead of putting it 27 away, 28 almost, I'm going to put it $25 away. From where? From our entry. So since we are with a buy and we're planning to open the position at 30.40, we can target the take profit to be $25 away, right? Which instead of 3,100 will go down to 30 Okay, maybe you can stay there like that. Okay, and we can use the same ratio and just subtract 25 from here. Excellent. Great. And now we are set. The only thing missing here to complete this equation is just the number of units that we need. Okay, so how do we do that? Let's just give it, there we go. So how do we do that? Well, very easily. We can see that with 1 ounce, if it's $25 away, we can lose or gain 25. To emphasize, this is our entry. So from our entry to here, it's 25. From our entry to here, it's also 25. Remember, we're not planning to buy the current market price. We're planning to target the buy for 3,040. Okay, so how do we get to 250 from 25? Honestly, we don't really need a calculator for that, but I would like to do it with you guys so you can learn. Who can tell me how many units I need? How much is 250 divided by 25? Who has an answer to that? I know that you can do this, guys. Great, Tom. Very good job. Who else knows? How much is 250 divided by 25? This is how many units we need. So let's use a calculator for that. Correct. So whoever wrote 10, as we can see here, if we place 10, that's going to change from 25 to 10. Just like that. Perfectly as we've planned. Okay, so we have a fully composed position with 250 and 250. Well, this ratio of 1 to 1, we're going to fix it in a moment. Correct. Everybody who wrote 10, you guys are correct. Yeah, so we can see that with 10 units, because this is $25 away, we can get 250 just like we wanted. So our now price is 30.38. Okay, pending buy is 30.40. Take profit 30.65. Okay, great. And this will give us 250. And lastly, we have the stop loss, okay, which, as we said, very easily, this is a ratio of 1 to 1. So let's suppose that I'm not really happy with making and losing the same amount. And I would like to now maintain my profit. This 250, I wanted to stay just like that, but I want my loss to be half, because this will be 2.5% of my account, right? I'm gonna give you guys a nice equation to measure the percentage exposure from the account very easily. What we can do is we can divide the possible loss by the balance, and that is factor, and then we have factor times 100 to give us the exposure, which means 250 divided by 10,000, that is 0.025 times 100, 2.5. How can I know that? because let's do it together. Okay, yeah. So this is a very nice way to know the exposure of the account and how can we, okay, maintain this 250 while reducing the possible loss to the by half. Well, uh, unfortunately, no. Unfortunately, no. Your request is to receive the presentation. You don't need that. You don't need that because of what I've explained in the beginning. I am aware that I'm doing things quite swiftly because but the reason is that I want to give you as much as useful content that I can. So what you can do is you can just watch the recording in your own pace on our YouTube channel. That's the best solution that I can give you. All right, so how can we reduce the 250 to 125? That's the we need a solution for that. So the easiest thing to do, because this is $25 away and this is $25 away, all we got to do is just chop it by half. So instead of $25 away, it will be $12.5 away. So we're going to take our entry minus 12.5, which is that number, and that number we're going to paste on our stop loss. Okay, we're not going to paste on our stop loss. Let's try that again. Okay, great, great, great. As we can see, we fixed the ratio. Instead of 1 to 1, it's 1 to half or 1 to 0.5. It doesn't matter. And we can see that now we've got a fully composed position without any, at least to my opinion, anything difficult. Guys, we still have another 3-4 minutes. Please share with me any questions, any hesitations that you've got. Oh, before we do that, let's just ensure that we have the ability to take the position here. Because as we can see, the position is 10 ounces, and we would like to know that we have the capability to take the position. So how can we ensure? Well, very easily. We see that the price per unit is 38 times 10 equals 33.90. That, in other words, means price per unit times number of units equals value. You don't need to know that if you're using the web trader, because it's done this for us automatically and it's displayed right here. The number of units, which is this, price per unit, which is that, gives us the value. Okay, and with the value, we can divide by the leverage. Leverage multiplies buying and selling. Okay, no. Buying and selling multiplies. Okay, and the leverage is 1 to 20. So that means we are multiplied by 20. And how does that help us? Because we're multiplied by 20, we can divide the value by the leverage to know the margin requirement. Margin requirement. Excellent. And the margin requirement, which is displayed under margin impact, means the necessary amount to open the position, which is 20 times less thanks to the leverage. Okay, excuse me for the typos, guys. You probably notice that I'm doing everything at once, so sometimes there are mistakes like this. Okay, so to recap what we've done today, initially we looked at gold, we did some analysis roughly, and we constructed the lines. Then afterwards we looked at the averages. We have applied an average true range to help us assess. Then we look at the levels that we designed initially, and it seems too far-fetched. Then we've made those adjustments to 3065 and 3015, which was right here. And then we adjusted it to be a little higher to match with our ratio. Okay, and now we're looking at 250. Well, the numbers has changed since gold moved a bit, but you guys can watch the recording again. Anyway, the purpose of this is to construct the position by certain guidelines, which we've done remarkably. Guys, I appreciate today whoever is joined us, and I really hope that you could pick up useful things from today. As I've said multiple times, if you want to watch the recording, it can be found on our YouTube channel. Until then, I wish you all best of luck with trading. Have a fruitful week and have a good day.